Hi, Kelly Eckholt here to update you with the key events of the week. So this week, the Reserve Bank's July Monetary Policy Review took centre stage, and that provided a few fireworks even though a relatively quiet affair was expected. The Reserve Bank seems to now be indicating that the time's getting closer to when an OCR cut can be expected, which is quite a departure from the view that they told us back in May, where they suggested it would be more like the second half of next year when you could expect an interest rate cut. The Reserve Bank is really channeling some of the weaker economic indicators that has come to light in the last 6 weeks or so, and they've implicitly reducing their growth forecasts reflecting those. The other thing that's going on is that it looks like they're much more confident that inflation will be back under 3% in the second half of this year, so they've obviously got some lower inflation forecasts in mind as well. The upshot of all of this is that their monetary policy strategy is changing. It's moving away from a hold the line type approach to one where they're looking at the data to see when the first cut might be reasonable. For our mind, we still think that a February 2025 cut is still most likely at the moment, but it's now increasingly data dependent. It's certainly quite plausible that we could be seeing a rate cut before the end of the year if the data falls the right way. The markets, though, they're thinking much more aggressively about this and are even speculating on the possibility of a cut next month in August. What's going to be important there, I think, is how the data falls, and the key data next week is going to be the Q2 CPI, where we see the CPI rising by 0.6% for the quarter and 3.5% for the year. Any downside scenario on the basis of those forecasts, I think, will only intensify expectations in markets that easing is coming a lot sooner. I'll be back to update you again next week.